I guess the question was, I know one question is, would you share that PowerPoint with us? If so, I can send it out with the recording, if you're okay with that. I mean, you're famous and all, so we got to get you, more famous. So.
You guys, I'm an open book. My PowerPoints are your PowerPoints.
All righty,
no
great.
problema.
Great. Oh, and I now remember the question from the chat is, how did you project the returns without having, is this where that the property manager came in and was able to give you projections? Because obviously we project, in multifamily, having some people there, you have no people. How did that process go?
Yeah, it's a wild ride. That's what I was saying before is you have no T12s, no T6, no nada. So it was all based on comparables.
Okay.
And the property manager was able to help us with that along with the research in the area. But, it does beg the question, I'm surprised nobody has asked it, how do you even value it? How do you know? And, how do you value, well, the rents you can do as a comparable, but your purchase price and hotels are valued traditionally, they've been valued on their NOI. But these are not traditional times. So for the most part, it's valued on a comparable that you can find, which is what we did. Hotels, their valuation goes all over the map and all kinds of wacky things they used to value them on, like the average price of what is in your mini bar times 1,000 and a certain variable. And strangely enough, it comes out halfway close to what it should be.
Really?
So yeah, look it up, Google it. You'll see there's all kinds of wacky ways to value.
I know there's
hotels.
a lot of formulas and stuff in there for that. And somebody else had, can you show the 2-bedroom layout? And then Paul asked, what's the podcast name? And it's Michael LeBlanc, and it's themichaelblank.com is who she was talking about.
Yep, and it's episode 269 that talks about hotels.
269, gotcha.
And Becca, did Ruben interview you guys also in about this project?
He did.
Oh.
We just had to stand on the rooftop. So we did a Facebook Live with Ruben on his Capital Raiser show.
Yeah. You remember the episode number for that?
No, I don't. Sorry.
I'll find it real quick and drop it in the chat. So,
thank you, Jim.
my guess is that Ruben did a lot better job of digging into the details.
Yeah, he does great. We love him.
Awesome. Anybody else got any questions they want to ask Becca? We are at the top of the hour here, so I want to respect her time.
Do we have all the questions in the chat answered?
So I guess, Becca, would you do this again? I guess, knowing what you know now, going through this, would you do this again?
Right. That's always the question in life, right? You learn so much and it was very tough. Would you go through it again? And I would say yes. It's been the hardest raise I think I probably ever do. I left this raise with about almost $500,000 in people saying, I like what you do, but not this deal. So all the contacts I made and lessons I've learned that I can bring into my next deal, yes. And the group that I've met, the relationships with Bakerson, these guys are amazing. So that was a value right there. So yes, I would.
Now, so you said you did a lot of networking to find the Bakersons. And so I guess who found the deal initially? Was it the other group, you? Who found this deal to pursue?
Bruce at Bakerson found it through a broker. Mm-hmm. Yeah.
And how did he connect with you guys, Becca?
Well, we knew him through Ruben.
Oh.
Mm-hmm. And we knew Ruben through Brian Briscoe's meetup and Julie's meetup.
Yeah.
It's a small world.
It is.
It's all about network.
That is.
It is.
That's wild. Now, a question, when we first started the presentation, the owners weren't paying the debt service. I guess, how long, I guess the question is, did the Choice Hotels try to foreclose on the property? Was it in foreclosure? How does that work in this type of business?
Yeah, I would think that, during this pandemic, the hotels are extending lifelines. The franchisors are extending lifelines to their franchisees, ones would hope, but I think that at this point they're just done. So they were not able to make the debt payments. We know that. They were not able to do the operations, the debt payments, and the franchise. So it was just a matter of time. Whether they were in bankruptcy at that time, they would eventually be.
Okay, gotcha. Okay, interesting. And then, okay, so you found the opportunity. All righty. Anybody else got any questions? I don't want to monopolize the questions here.
How long do you want to stay on?
That's the next question. I don't want to, we got starving kids and I don't want to be,
Yeah.
I don't want to.
They can wait. They can wait.
kill the
Throw it at
kids.
me. I could.
I have
I'm
one
all for
question.
him asking all his questions.
Sure, go right ahead.
I have one question. So for the type of housing that you all are doing, have you ever considered as far as sobriety housing, or I know senior housing was mentioned, but was sobriety housing or halfway housing, because those are all short-term rental opportunities, but they could also produce not a guaranteed income, but a more consistent income than the alternative of, hoping that you get a tenant.
Yeah, that would be a great idea. That would be a great idea. We hadn't considered it for this market. Our target is the military, some of the soldiers that live off base there, and the medical center. But I think that would be an amazing thing to do, especially in my slight rant about San Francisco and expensive inner city markets. That would be a great thing to do there.
Yeah, that probably takes some more networking to find an agency like Section 8. I used to do Section 8 way back when, and get that deal flow to you so they could, supply you with that short-term tenant. So it'd probably take a little bit more, some more steps to find agencies that would do that. And I know there are out there, and that's a great and noble cause to do that. But you'd have to probably find those agencies and get that pipeline going before you get into something like this, because they're going to want, the bank's going to want some kind of revenue stream somewhere. That's a great idea.
Yeah. Well, and the more layers you put on this, the more complex it gets, the more people are confused and they say no.
Did you find a lot of new investors that like this, that have an appetite for this type of asset, or were most of the people eventually convinced, this is not the type of asset I would normally invest in, but you convinced me that this is a good project, so I'm going to go into it? Because if you found a lot of new investors that like these major rehab type deals, then you can take those into another major rehab type deal. It's hard to convert a yield investor to a very heavy value add investor. So did you find a bunch of new investors, Becca?
I found a lot of new investors, and I found that mostly everybody I have is a multifamily investor. So it set me out to find new investors, which launched me into different Facebook groups and different women's groups. And so I did eventually find the people I needed to find. But what I found that most people are multifamily investors. Heavy lifts I did find a number of those, and that's okay, which I like, because as you said, I could bring them into our next deal. I think the more this information gets out about hotels, though, we'll have a much more open-minded investor base.
Well, it's the education part of it, right? I mean, everybody here on the call didn't know much about multifamily. All of a sudden you start researching it, just like cell towers or billboards.
Yeah.
Everybody thinks, oh my God, or mobile home parks. It's the education part. So you're kind of like in the forefront of that education. So now when you went to these groups, were you specifically targeting people that had done heavy lifts in multifamily and trying to get an easier sell that way?
No, I was talking to anybody who would talk to me. Um,
Gotcha.
let's be
Gotcha.
honest.
Well, that's a good way to do it. Yeah.
But trailblazing is not easy because people look at you like, what? A hotel? Huh? Tertiary market? What? Yeah, no, I'm just going to go invest in this, 5.5 cap rate value, slight value add in Texas.
Exactly.
But, trailblazing pays off because there's so much meat in these deals.
So now that was a question I had a follow up is when you said the 20 to 30% discount, where's the pricing on it, as a hotel or as a multifamily? How did you come up with that price?
You begin with the end in mind, price it as a multifamily, and then back it into that.
Okay.
And then use the hotel metrics. If this were a regular market, you'd be more forced into looking at it as a hotel, a certain percentage of the NOI. But since this is the hotel apocalypse, it's just pretty much you do it on comparables. And that's what we did, since we had Serge's property right around the corner.
Gotcha.
Serge is the person interviewed on Michael Blanc's
Gotcha. Okay.
podcast.
Cool. All right, Winston, you have your hand raised. Go ahead, sir.
And this is like a question for the general group. I recently just bought a property, and I am looking to like expand into the more commercial field. I'm residential right now, but this doesn't seem like something that somebody can do part-time, right? Like with a full-time job. Am I wrong with that mentality, or is this something that you can dedicate 15 to 30 hours a week and still accomplish?
You first, Becca.
Yeah, I don't know if the question is speaking to multifamily investing as a whole, or Winston, were you referring to just hotel conversions or the industry as a whole?
The question was referring to the type of deal that you did, but I guess the more holistic answer is, I guess, multifamily investing as a whole.
Yeah, I would say yes on multifamily investing as a whole. You could do this as a part-time gig and still make tremendous progress. I was W-2 employee for 17 years, hustling around in a 3-state territory and still doing this. So yeah, hotel conversion, yes, you can do it, but it requires a team. You need not quit your job and go do a hotel conversion, but you have to have a heavy lift team in place and lots of checks and balances. Project managers managing the property managers, managing the other managers, lots of layers.
Well,
Sorry, Alicia, go
that's the
ahead.
big difference in residential to multifamily or commercial, right? There's a team. It's not just the acquisition. There's the insurance. There's the property managers, all his team, Winston. So going from residential where you probably managed yourself and, had a couple contractors, now you're going to these. So it is a bigger team, but again, you'll find your team, right? Good question. Thank you very much.
Yeah, good question.
Awesome. Okay.
I have a question.
Go right ahead.
When you were doing your criteria for the conversion, or when you first started looking at the hotels, excuse me, did you consider a number of doors or units that was a threshold that you just had to reach? And did you base that upon the numbers that the hotel had, or what it would be converted to, or you had to consider both?
Great question. We considered keeping them all 100-unit rooms initially. And the property manager said, no way. The market absolutely couldn't absorb 100 studios, or even smaller than studios, just hotel rooms. So they said, no way. So then we went down to about 80s, and they said, nah, you still have a little too much here. And we skinnied it down to 65 based on the square footage. So that was another factor. You had to have the square footage
Mhm.
to have a comparable, because you certainly don't want the smallest studio in town. Yeah, so those were the factors. We was 100, then 85, then we got down to 65, and it was based on what the market could absorb. Because 31 studios, 31 one bedrooms, you got to see if the market can actually absorb that. And then the 2 bedrooms, those are easier. Yeah, square footage and trying to get the maximum amount of units out of it.
Right. So did
If-
the
Go
cost
ahead.
of the 2 bedrooms, did you not do more 2 bedrooms because of the cost?
Yes. The 2 bedrooms, there were some suites. So those were former suites. Mhm. But a good play in the hotel space is to find extended stays that already have kitchens and have
Yeah.
larger square footage. And you could save yourself a lot of cost in plumbing, in the kitchenettes,
Right.
and in the square footage. It's already done for you, so you don't have to do so much framing. We did quite a bit of framing, none of it structural, fortunately. But if you start dealing with structural stuff in framing, things get pretty messy. Ours was just reframing bathrooms and kitchens.
Cool. Thank you.
Yeah, you bet.
With that being said, now how are you, like, when the zoning, basically you just had a, slight variance. So how is the city, when you're changing the use in this, were they going through and you had to get it re-inspected? What was that process like, when you're saying, okay, we're going to take it to, 1 bedroom now, we're going to span this out?
The city walked the property with us before we closed. The city walked the property as well as the fire marshal. So we knew exactly what we were getting into. And I would recommend to everybody, if you have access to something like that, and in tertiary markets, you can get their attention. In Phoenix and other, larger markets, you probably won't get that one-on-one attention. But it really braced us for what they would want from us and how to budget.
Interesting. Okay. Interesting. Now, did you have an architect draw up the plans on like a 1 bedroom, 2 bedroom, and then you went from 100 down to 68? So each time did you use the architect, or did you have overall, here's what we think the 1 bedroom is going to be?
We went back and forth with the architect and the property manager. We said to the architect, great, 100 units. Property manager said, no way. Architect said, oh, those are too small. Okay, let's try 85. Okay, let's take it down to 65. So the architect has been involved all the way through.
Okay. Another expense, obviously, that most multifamily won't do unless you're doing a heavy lift. That's true.
Yeah, heavy lift. I mean, it's a hairy deal, but
yeah,
heavy lift, there's a lot to do, but it's worth it. The returns are great.
Yeah, I know many times when you go to redo like the large construction that you're doing, when you have an architect involved, many times with the plumbing and the electrical, there's a lot of added expense with the engineering because you got to have the MP&E on there too.
Yeah. There's been a lot of expenses. This is a pretty expense flush deal. So fortunately, we've got it at such a good price.
Yeah.
And Ehab asked a question, is he's wondering if the hotel market still has good deals. And he may not have joined us at the first when you talked about the market. So if you could cover that, that'd be great.
You bet. Yeah, you bet. We think there's about 3 more years left on this till about 2024. Lodging fundamentals run about a 5.5-year cycle. Hotels, especially small hotels, were struggling even before this because of the competition posed by Airbnb and VRBO. So yes, there's time for sure. And you'd be surprised how easy these deals are to find. I mean, multifamily deals, you have to go through a broker, you're, search in database. This, if anybody has a Yellow Pages, flip open the Yellow Pages. Call your, you know where they all are. They're easy to find.
They get the biggest signs. They advertise better, right?
That's right. They're not hidden under rocks of who owns this place. Call up 10 of them. We did that. We called 10 of them, and one of the owners said, yeah, we're interested.
So it's not okay. I guess I know what I would say to a multifamily investor. What do you say when you call up? Because obviously you're getting the front desk person who's probably an employee, right? So how do you get through that gatekeeper, and what do you say to them?
Yeah, you say, may I speak to your manager, please? And then you speak to the manager, and are you the owner? And most times, yes. Are you interested in selling? We're multifamily investors. We can give you a fair price, get you out of this mess you're in. Don't say that part, but.
We'll edit that out of the recording. Interesting. So it's actually the manager that's the owner, and then obviously they know what you're talking about because obviously they're in the midst of this, right? They know that this is the apocalypse, and maybe this is their angel calling on the phone saying, "Oh my gosh, interesting." So you called somebody up and they said, "Yeah, they'd be interested."
Yep. Yep. Yeah, it's very easy to get to the owners, and it's very easy to find these. They're all listed on Google.
Interesting. So now, did this couple who was probably a mom and pa, did they have a number that they needed? And I'm sure they did, but I'm kind of comparing it to the multifamily. Well, I bought it 2 weeks ago, but I want $20 million more than I paid for it. Obviously, you're helping them out of a situation. Did they give you guidance on what, or did you give them, seeing that they weren't like what we call experts, right?
Right. Yeah, they had their number in mind, but the market had gone down so much also. Even if you listen to that interview with Serge, our comparable property, he started the negotiations before the pandemic. And then as the pandemic hit, he got another 20 or 30% off.
Wow.
Because it is what it is. But they got out with enough. They were happy with it. We were happy with the price. They got what they needed. It did take a while on the negotiating with the franchise, though, so it delayed our close substantially. We had
talk about that a little bit. I know we had talked about that earlier. Kind of explain that to people. What does that mean?
Yeah. For those of you that just popped in here, Quality Inn Motel is owned by Choice Hotels franchise. So the franchisee pays a franchise cost. To get out of these deals, you have to buy out the franchise. And the franchise has to agree to it. So the deal should be made on your contingency that they get out of the franchise, because you don't want to end up with a hotel that, running a Quality Inn hotel if they can't get out of their franchise. So most people push that back on the owner and put it as a contingency in the clause that they must get out of their franchise in order for us to buy this. And if they can't get out, deal's off.
Okay.
But it's oh, sorry, go ahead.
We're new two new ones.
Oh.
I guess I need to wash them off and dry them out and take them in the house.
No, I think she just doesn't have her microphone muted.
Doesn't have it muted.
Yeah, but as I was saying, it delayed our close by about 3 months.
Okay. But it obviously the owners wanted to do it because obviously this is their, white knight coming through. It's probably the franchise holder saying, okay, they know the market, they're hoping that they can hang on to it, right? And keep their branded hotel in that location.
Yeah, exactly. It was the franchise holder holding on to inflated values that the owner didn't believe it was worth, and that we all know it's not worth. So they were thinking, they said, we want this amount to buy out. And the owner said, it's not worth that. It's a pandemic. So it was a lot of back and forth between the two of them, which is why it's good to put this back on the owner rather than the guy that does it subject to that I mentioned, that he negotiates directly with the franchise. I think that's a bit risky because you can end up with a hotel on your hands, running a hotel when you really are a multifamily person.
Yeah.
If he couldn't get the negotiation done.
Yeah.
You want the owner to negotiate the franchise, and if he can't get out, deal's off.
Definitely. All right, got another question here. What kind of markets should we look for these type of hotel deals? There are quite a lot of these hotel deals I see in markets where they depend heavily on tourism, but those markets, economics and population growth are not good. Any general criteria to, find such geographic markets? Do they still stay, I think what she's asking is, do they still stay in the multifamily, let's say, rules of thumb? Great
I would say
question. Thank you,
yes.
Missy.
Yeah, that's a great question. Yeah, this is going to become a multifamily building, so stay within your multifamily fundamentals. Look for your emerging markets, look for your rent growths, or just look for just an amazing value play where you could flip it.
Awesome.
But yeah, you want to, as I mentioned, begin with the end in mind. This is going to be a multifamily
Mhm.
building. So
Mhm.
manage it and look at it, analyze it like that.
Mhm. Got it. Thank you.
Yeah,
Gotcha.
great
Thank you.
question.
Good question. Good question. Interesting. So now you said this is a 7-year hold, correct?
This is a legacy, a 10-year. So,
Okay.
but if the market is amazing at the 8-year mark, we'll sell it. We'll probably start looking around at 7 years, but the investors have all their money back by year. It's really year 5.5, but about year 6.
That's wild. So now when you went to pitch these numbers, right, to investors, one, you're pitching something different. And then two, the returns I saw on that one page, 2.42%. Did you have to convince them that, yes, we can do that? So you're kind of convincing two different bubbles, right? Hey, we're going to do this heavy lift. And oh, by the way, this is the returns. There's, I guess they're so used to seeing certain returns from multifamily. Did you have that as a question or a hurdle that you had to overcome?
Not really. No, I think people saw the value in the heavy lift here.
Okay.
It screams a heavy lift at a 1.7 purchase price and a 1.7 rehab. So to see an equity multiple of 2.4, 2.42, they said, okay, well, there's the value in your heavy lift. Yeah,
Awesome.
and the fact that it can be acquired so inexpensively as compared to multifamily. We got these at about 26 and some change or something like that per unit when it's going to be valued at about 90 in the end. So
okay, yeah, that's what I was going to ask you. What are your projections of this being valued at? So you said 90. At what are you doing? 65 a door? Is that what you got?
you got it.
I see.
Want
I
me to
can't
pull
do
up
this
my
stuff
slide again?
I can't do this stuff in my head. So 6.12, right?
All right, Mr.
68.
Cat, let me see here. All right, we're all in at 62. 62,000 per unit. Expected sales, and which is about 4.4 million essentially. Expected sales price is 5.8 million.
Okay.
And about 90 a door.
Okay. Awesome.
89 and some change at a door. Yeah.
Not a bad return. Not a bad return.
I know. We like it.
Yes. Well, listen, Becca, thank you very much. Anybody else have any other questions? I'm going to let people get back, and we could talk all night. But thank you very much for sharing your story, your professional, slideshow as well, and all your information. I appreciate it. Thank you. And best of luck. Keep us posted. This has been a great experience. I think people learned a lot. I know I learned a lot tonight of different things that I didn't know about. And thank you very much for spending your evening. Now go feed your kids before I get nasty emails that, somebody's, the child services are going to come by and blame me. So, but thank you very much for your time and your story. I appreciate it. And thank you folks for joining. Next 2 weeks, June 30th is our next presentation. And we're going to have Charles Seaman, who's going to teach us how to do underwriting. Underwriting a multifamily. Probably not be a good presentation as Becca here, but we're going to try. You raised our standards, Becca.
I love Charles Siemens. I think I'm going to join you guys. He's great.
Yes, Charles
So,
is awesome. Charles is
He's
awesome.
awesome.
But again, like I said,
Well-
thank you very much. I appreciate it. Thank you for all for attending. Again, like I said, I'm going to get the recording out along with the chat log, and also I'll get her PowerPoint distributed with an email. Look for that for me in the next day or so. I'm trying to get it out tomorrow because Friday I'm going to be out of town. So, but thank you very much, everybody, and you guys have a great night and a great weekend.
Good night, everybody.
Good
Good night,
night,
guys.
everybody. Thank you for the opportunity and your time.
Oh, well,
Much
thank you.
appreciated.
I'm very grateful.
Such a
Thank you,
pleasure.
Great
Bye-bye
show,
now.
Pat.
I am.
Thanks,
I am
Jim.
as well.
Daryl, thank you.
Bye-bye, gentlemen. Bye, Leisha.